Let's take a look at the markets. Asian markets closed mixed as investors digested weaker than expected Chinese data, while the Japanese yen firmed following the Bank of Japan's decision to keep rates unchanged. The Nikkei share average rose by just over 1%. The Hang Seng Index declined by 1.6%, while the Shanghai Composite Index declined by 1.2%. U.S. markets ended on a subdued note yesterday, this after the U.S. Fed kept interest rates unchanged, also hinting that a rate cut for September was unlikely, as it kept a close eye on the impact of the import tariffs kicking in from the 1st of August. Higher U.S. import tariffs will ultimately see the U.S. consumer paying for goods, more for goods than they did before, which could likely result in higher inflation. During the day, data also showed that the U.S. economy grew by an impressive 3% in the second quarter, but there are concerns that this may not be sustainable. The Dow Jones Industrial Average declined by 0.4%. The S&P 500 fell by 0.1%, while the Nasdaq Composite Index rose a mere 0.2% on the day. All right, let's get into conversation now with Ricardo Smith. He's Chief Investment Officer at ABSA Investments. Thanks very much for joining us, Ricardo. So the Fed kept rates unchanged yesterday, and I suppose the 3% GDP print didn't help support a rate cut. And with tariffs kicking in, with inflation, of course, concerns, I guess that decision was quite valid.
No, it certainly is. I think, consensus expectation was for rates to remain flat. The only individual with strong view that there would be a cut was President Trump. But I think perhaps, misconstruing those comments from Fed Chair. Inflation is still above the Fed's target, so coming in at 2.6% with core closer to 3%. Unemployment stable at 4.1%, and that positive surprise in GDP number. So not a lot of pressure from the Fed to cut rates at this point, but the greater concern is as these tariffs kick in, as they filter down, indications are that the bulk of it will be transferred to consumers, which will be inflationary for the US. So the Fed keeping an eye out on that at the moment.
Yeah, well, our situation arguably is a lot different. Here at home, we see that inflation is currently running at 3%, while the repo rate is at 7.25%. Monetary policy does appear to be highly restrictive at the moment. But even then, do you think that the MPC is likely to express a similar sort of level of caution as the Fed?
Yeah, so I think completely different. There's quite a bit of policy divergence, and tariffs, while they may be inflationary for the U.S., on our side, unless, there's retaliatory tariffs which we haven't implemented, or there's a full-blown trade war between, the U.S. and economies like China, shouldn't be too inflationary from our part. And in fact, they should be a bit deflationary if we start to see a bit of demand cooling down in the U.S. And further to that, locally there isn't a lot of demand. Energy prices are subdued, fears of a recession, starting to creep in. The currency has been stable. Food price inflation, has come down besides issues, around avian flu and some of the droughts that we had last year. So all indications really towards, a rate cut. Further out, one thing that has complicated the conversation is a discussion around a lower inflation target.
So, Ricardo, I see that the local currency has weakened somewhat. What are some of the factors behind that? Of course, we have the 1st of August decision coming through tomorrow. And of course, we haven't heard anything in terms of any change for South Africa. 30% import tariffs are likely to kick in for us come tomorrow.
Yeah, so that's one of, the big ones. There is quite a bit in the air. There's the rate decision today and, tariffs kicking in tomorrow. The U.S., it was unlikely that they were going to cut deals with all these economies, between, in a period of 2 or 3 weeks. And so in the order of things, we did stack up a bit behind. And so that's likely to negatively impact us from an export perspective. our exports are roughly 3% of GDP, and if you assume, elasticity of demand, that is quite perfectly correlated to the price increases, we could get about a 1 percentage point knock in GDP, which is consistent with the forecast that we've seen, where from expecting 2% growth in GDP, we're now sitting at about 1% for the year. So not really surprised that a deal hasn't necessarily been struck. I guess, participants hoping that this can still be pushed further, because there's quite a lot of countries there, not just South Africa, that still need to strike a deal with the US.
Yeah. So before the decision of the Constitutional Court at around 10 o'clock this morning on the issue of Vodacom versus Makate, how was the share price behaving? And now that the decision has been that the case should be remitted to the Supreme Court of Appeal, how is the share price doing?
Yeah, it's been a bit of a roller coaster ride. So the share has been quite volatile. I think immediately after the decision, we saw quite a huge jump in the share price. It has come down slightly. So overall for the day, it is a bit flattish, but it is quite important to contextualize that, Vodacom has been rallying quite aggressively. It is up close to 40% for the year. Although longer term, it's still attractively valued, but certainly, market participants happy with today's ruling. The 29 to 50 billion previously stated, would be more than half the value of Vodacom. And so to the extent that they afford to actually make the payout was questionable. So markets happy with the ruling. We'll see, what the Supreme Court of Appeals says going forward.
All right. And lastly, what do you expect the Reserve Bank governor to announce to us come 3 o'clock?
Definitely a cut.
Let's hope so. Thank you so much, Ricardo. That was Ricardo Smith. He's the Chief Investment Officer at ABSA Investments.